And hello, everyone. Thanks, Lee. Lee and I go way back. I'll say way back. We go back a few years. Lee and myself, we're order flow guys. And yeah, today I'm going to talk about order flow, but I'm also going to talk a bit about the trader's mindset. And being a trader, you have to have the right mindset because there's a lot that can go wrong in trading, and oftentimes, we sort of find ourselves stuck in trades that aren't really working out, and we want to, we don't want to take losses. Losses affect you, and it comes down to your trading style that's going to affect your mindset and affect how you approach the market and ultimately how you make money trading. So, my goal for you today is I hope to show you an easy way to understand what's happening in the market, so you can make better trading decisions by adding order flow to your existing method of trading. Again, I'm not trying to, convince you to give up your existing method of trading and, turn everything over to the order flow gods. No, for a lot of people, what I've come to realize, I mentor people, and what they do, they tend to take pieces of order flow analysis that that is going to improve their trading. Something as as simple as adding point of control or adding delta to their analysis, has really transformed their trading. There's so many different ways to approach the market. If you've ever read books like Market Wizards, you'll understand that practically everybody has a different way to approach the market. That's what makes the markets the market, is the way people approach. There's short-term traders, there are medium-term traders, there's long-term traders, and everyone has their own different way of approaching the market, and my way just happens to be order flow. Now, if you stick around till the end, I'm going to show you how to get my book, Trading Order Flow. It's a 150-page book. It's PDF. You're not going to send you the actual hardcover book. You can download it. Just enter your email, and it's free. So, today I want to teach you about the mindset of a trader. About what it takes to succeed. But before I do, I just want to talk a little bit briefly about myself, just so you understand who I am, where I'm coming from, and why I like to think that what I'm talking about is important. I've been a trader for over 20 years at a very high level. I spent 8 years as vice president of futures trading at JP Morgan. Prior to that, I spent 4 years at Cargill. I even set up a trading desk for Cargill in Singapore. I spent 3 years at the big German bank Commerzbank as a Eurex trader. A couple of years at EDF Man, the big English trading company, and I started on the CME floor back in the early 90s. I started as a runner, and I left the trading floor when Globex was just starting to take off, because I thought that that's where the future of the markets would be. And fortunately, I made the right decision, at the right time, and my career took off from there. So in 2013, I left JP Morgan. Now that's almost 5 years ago, actually, and I started writing a book called Trading Order Flow. And I was trading for myself still at that time, but the software that I was using, it was just basic volume footprint charts. In 2015, you didn't really have the amount of volume footprint charts that you have now. NinjaTrader is even going to come out with some sort of volume footprint charts. I think they're going to call them volume metric charts. But back in 2015, it was very limited, and I know that computers can help traders. So what I sat down with the programmer and I said, hey, I want to take the volume footprint chart and have it show me where there's price rejection, where there's price support, where there's absorption, and other little market nuances. And because at that time, I was just doing it all manually, doing it from visual recognition. But I know that you can program that information. And Lee, actually from Emoji Trading, has some of my actually has all my indicators, I think, now on his Emoji Trading platform as well. So there is value in what I have to say and where I'm coming from. Now my order flows trader runs on NT7 and NT8. Yeah, NT8 is the new version. It's version 12 just came out last month, a few weeks ago, and it's quite sweet actually. After I made the switch to NT8, I haven't looked back. But let me be clear, trading is about making decisions. That's what trading is about. You've got to constantly be making decisions. Do you buy here? Do you sell here? Nowadays, people want a system that just says buy here, sell there. That's not trading. That's trade following. Order flow trading is not a red light, green light trading system, but rather what it does is teach you how to understand what's happening in the market so that you can make decisions. And honestly, once you understand what's happening in the market, decisions become very clear. So before I begin, a brief disclaimer: this presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, I should add one more part to that, not all results are going to be the same. It comes down to you as a person, you as a trader. Are you going to take action? Are you going to, want to learn? Are you going to want to improve? Basically, sometimes, people, they'll say, yeah, I want to become a better trader, but they don't want to take the steps necessary. How are you going to improve anything in your trading or in life in general unless you take the steps to improve yourself, period? It's not going to happen. But today, what I want to do is I want to take you inside the trader's mindset a little bit and, tell you, what separates bad traders from good traders. Last week I actually had the pleasure of presenting here at Investor Inspiration, and they asked me back, and I don't want to do the same presentation, but I want to talk about some slightly different things that gets you provoked, gets you thinking about trading and in the markets in general. And in my career, my professional career, I've been around very good traders. I didn't spend much time around bad traders, and unfortunately, when I left JP Morgan, and I started doing order flows, I created order flows. I started working with a lot of retail traders, and people were struggling. When I'm working in an investment bank, all the traders there are, they think they're superstars, and a lot of them are. But when I start working with regular traders, regular people, I realize that there's a lot of bad traders out there. It's like golf, right? I used to caddy when I was like 10 or 11, and I caddied at this country club, Barrington Hills Country Club, and I just thought, all the guys there were good. They're like scratch golfers. I just thought everybody was a good golfer. It wasn't until I went to a public course. I'm not really big on golf, but I went to a public course, and there's hacks out there. Guys hitting at the other fairways, and I sort of saw the same thing after I left JP Morgan and I started order flows. There's a lot of people out there that are hacks when it comes to trading. Again, I laugh a little bit at that, but some of the stories that I hear from people, it just has me shaking my head on why are they trading. I mean, there's other things they should probably concentrate on than trading. But what separates the good traders from the bad traders is, the first thing is they don't know how to trade. They don't have a method to approach the market that's going to give them reliable entries and exits. They're not necessarily open to improving their ways of trading. They think they know everything. 2 and 3 are sort of related. You sort of see that with these Bitcoin guys. A lot of these Bitcoin guys, Bitcoin had this big move up and it's just recently come down. But they maybe they bought a year or two ago, and at $500 or something, and it's trading in the tens of thousands, and they think they're great traders. They just happen, their timing was good, but if you were to ask them a year or two ago, did they expect Bitcoin to be trading 19,000? Probably not. But once it hit there, they think they're trading experts. And they think they know everything about the markets, and you see them looking at a chart saying, oh, there's support resistance here, the market starts coming off. Well, you should buy more because it's going higher. No other reason than it's a better buying opportunity. I could buy more now. Okay, fine. I'm happy to hear that you're bullish of the market, but what other reason for it? And another reason is they're overconfident. I said they've had 1 or 2 good trades in a row, and they think that they're the best traders out there, but the market is very humbling. The market will spank you when you do something wrong, and it's going to sting. And lastly is people just don't take trading seriously. You should approach trading as you would starting a business. You should have a trading plan. Most people don't have a trading plan. They just sort of come to the markets, they turn on their screens in the morning and say, okay, where are we going? And they think they're momentum traders. Oh, the market's going up, I'll get long. And that's not taking it seriously. You wouldn't open up a restaurant unless you had a plan. You're going to set your menu and buy your ingredients. So most everything you cook is going to use the same ingredients. So you're not wasting money. And trading is the same way. You should have a trading plan because it's just going to help you in the long run. So what's the quickest way to become a better trader? Well, one, there's two ways, I think. Is one, learn a solid method of market analysis, whether it's technical analysis, whether it's fundamental analysis. Order flow falls under technical. Yeah, you got to have a method of trading. And just buying an indicator is not a method of trading. You just, most of the time people buy an indicator, they don't understand what the indicator does. Sometimes they're just complete black boxes. Let's say buy here, sell there. That's not trading. Unfortunately, that I don't know how to put it to you, but that's not trading. And the second way to speed up your learning is learn from a trader with real experience. Learn from somebody that's traded for a living. Someone that's spent the time in the trenches. Someone, more importantly, that's been through market upheaval, through different environments. Like I said, these Bitcoin guys, a lot of them are sucking wind right now because they've only known the last year and a half rise in Bitcoin. And now that they're suffering through, a big 60% correction, they don't know what to do. I'm in all these little Facebook groups for cryptocurrencies. Back in November, December, my timeline was flooded with comments on, oh, this currency is great, this cryptocurrency is great, and so on. Now I don't see anything. I don't know if these guys just blew up all their money and are busy working now because they got all these loans that they took out to buy Bitcoin and stuff. I don't know. They don't have any real experience, and they're telling people to buy Bitcoin, buy how to trade, and they don't have any experience in up markets and down markets. Different experiences. So those are the two ways to really become a better trader: is learn a solid method and learn from someone with experience. Now, for me, order flow is the method. Order flow makes it easy to find hidden strength and weaknesses in the market, and determine if highs or lows are going to hold. Every time a market makes a new high or a new low, you're going to want to ask, are we going higher or are we going lower? How to see market-generated support and resistance levels. Lee just gave a great presentation on market-generated support and resistance levels, so I don't have to cover that. And determine if price is being rejected. And this information is not available on a normal candlestick chart. This is your normal candlestick chart. Where are you going to see market-generated? Where are you going to see support and resistance levels? Lee just debunked the whole thing of the more times a price trades a level, the stronger it is. How can you see when price is being rejected? This is an order flow volume footprint chart, and for me, it's like it's a work of art. It tells you can see where price is being supported, where price is being rejected, where buyers are being aggressive, where sellers are being aggressive. There's just so much information that you get on a volume footprint chart that you don't get on a normal candlestick chart. So the first thing I talk about is, so you want to be a trader. We all want to be traders. That's why we're here today. Because we want to be a trader, we want to improve our trading that we're currently going through, and hopefully, use it as, the springboard to, if you're working a job, eventually, hopefully, your goal should be to leave that job. Nobody loves their work so much that they never want to quit. Honestly, if I were to ask you, do you want to work a job for the next 40 years, or, would you rather trade a couple hours a day? You'd probably say, I'd rather trade a couple hours a day. But trading is not for everyone. For some it is, for others it's not. So you have to ask yourself, are you willing to take action? Are you willing to put in the effort to learn how to trade? Do you want to be your own boss? Do you want a regular paycheck? If, being a trader, sometimes you got money going out, you got losses you got to cover, and you don't have money coming in. So you miss that dynamic. When you work a job, that on the 15th and the 30th you're going to get a paycheck. In trading, there's no guarantee like that. Can you handle rejection? And does losing trades, having trades that lose you money, does it affect your psychology? Sometimes I wonder, if you've ever, done a history of trading, right? You know who the turtles are with Richard Dennis, how he got, the group of 20 people to teach them how to trade. Sometimes I wonder if, he got like a pickup artist guy, guys that go to bars that pick up women, how they would fare as traders, because, they can handle rejection and move on, that they take action. I think, honestly, I was just having this conversation yesterday with somebody. Honestly, I think pickup artists might make good traders because, they don't take things personally, and so they're not going to take the losses personally. They can handle rejection, and, they say what they're going to do. They have extreme confidence, and in trading, you need confidence. So is order flow trading for you? Again, for some, yes. For others, no. And you gotta ask yourself, are you willing to put in the time and effort to learn or not? If you're not going to put in some time to learn, order flow, how to read and understand what's happening in the market, then there's no point in trying to learn order flow. If you're a tire kicker, what that is, if you're somebody that jumps from indicator to indicator, if you buy an indicator, you try it out for a day or two, and that day it just perhaps didn't make money, you give up and you ask for a refund and you move on to another indicator, then order flow is not for you, because what order flow is going to teach you to do is understand what's happening in the market so you can make your own trading decisions. You're not going to rely on an up arrow or a down arrow per se. That's what order flow teaches you to do. It teaches you to read and understand what's happening in the market. So 90% of traders lose their account completely, blowout in the first year. Why do you think that is? It's because they don't have a good method of trading and they don't know how to trade. So ask yourself, why keep trading the same way the rest of the traders are? You don't want to be in that 90% group. You want to be in the 10% group. And what order flow analysis allows a trader to do is plan for a trade. Too many traders trade without a plan or a poorly conceived plan, and that's just the recipe for a failure. If you're serious about your trading, you have to approach it as a business. You wouldn't run a business without a trading plan, would you? No, you just wouldn't, because that's just going to doom you to blowing up. And in trading, it's going to cost you a lot of money. It's going to cost you your trading account. Hopefully, it just only costs you your trading account. If you got to add more money in for margin call, then just insults you even worse. But this is an order flow volume footprint chart, and it looks a lot more intimidating than it really is. And this is on the NinjaTrader 8 platform, and there's a lot of information, but there's really 3 building blocks that I like to call them, which is the point of control, the delta, and the imbalance. The point of control in a bar is the point in a bar with the most volume, and it's usually highlighted with the gray rectangle around it. The delta runs along the bottom, and it tells you the difference between net aggressive buyers and net aggressive sellers in the bar. And imbalance. And imbalance is, now remember, with an imbalance, right, a market's a two-way auction. So there's a bid and there's an offer. So the market is, say, 3 bid at 4. So when you have an imbalance, it means you have either more aggressive buyers or more aggressive sellers by a ratio of at least 4 to 1. Usually the industry standard is 4 to 1. So just to recap, point of control is the price level in a bar with the most volume. Every bar has one. You can see it's these gray rectangles in the bar. Delta is the net aggressive buyers or sellers in the bar, and usually it runs along the bottom. Some put it, in the chart, but I like it along the bottom. It tells you, 155 tells you there was more aggressive buyers, 155 times more aggressive buyers and aggressive sellers in the bar. -6 tells you there was 6 more aggressive sellers than buyers. -43 is there was 43 more aggressive sellers than buyers. +226 is there was 226 more aggressive buyers than sellers in that bar. So you get the idea there. And lastly is the imbalance, is when there are more aggressive buyers than aggressive sellers, or more aggressive sellers than aggressive buyers in the two-way auction by at least 4 to 1. And how that appears on the order flow chart is inside the bar you'll see numbers, right? You'll see black and you'll see blue and you'll see red. Okay, so if it's blue, it tells you it's a buying imbalance. So like here, 1 against 69. So when this market was 47 bid at 48, 1 lot traded on the bid, 69 traded on the offer. So 1 against 69, 69 is more than 4 to 1 against 1. So that's why it's highlighted in blue. Here 5 against 56, 2 against 48. And silent imbalance is 31 against 145, 1 against 20, 3 against 40. These are silent imbalances. And sort of an advanced concept is a stacked silent imbalance, is when you have more than 3 imbalances stacked on top of each other. That's what's called a stacked silent imbalance. And that acts as a market-generated support or resistance level oftentimes. So when I consider a trade, I go through a process to determine what exactly it is I'm trying to do and how I will react regardless of what may happen in the market. Every trader has to develop their own trading plan. It's going to be based on your own risk tolerance, your goals, trading goals, your financial situation, and whatever factors come into play in your own individual situation. Not everyone's trading plan is going to be the same. Everybody is different, and you have to make your own trading plan that is going to suit you, that you can follow. You don't want to create a trading plan if you're not going to follow it. I mean, it's kind of pointless. Now, when I launched the Order Flow Trader software, I created what I call the ratios. And ratios help to determine if price levels are being rejected or defended. And there's two types of ratios. There's a ratio bounds high, which indicates price is being rejected, and a ratio bounds low, which indicates price is being supported. And they will appear on the order flow chart, the volume footprint chart. Again, this is also available on Emoji. This is also available on the NinjaTrader version of Order Flows Trader. And what it is, it appears on the top of down candles or at the bottom of green candles. And if it's a blue number, so if you see blues like these, blues, 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 it's an important number to note. It indicates either price support or price rejection. And if it's a black number, that's just your normal order flow, right? The markets exist to facilitate trade, to transfer risk from one party to another. So that's why oftentimes, markets, don't exhibit anything, but it's when they exhibit something, that's the time to act. And when you see it in the order flow, those are the times where you can profit. So this is a perfect example, okay? Here you have the high of the day. This green line is the high of the day. And at the high of the day, you have a blue number. It's a red candle, so the blue number's on top. And it indicates this is a ratio bounds high, and it indicates price rejection up there. And look, you also got a stack, so you got a selling imbalance, 5 against 30. 30 lots traded on the bid, 5 on the offer. So when you got up here, prices were rejected and aggressive sellers came in. And you got a selling imbalance. Even the bar closed down, and even towards the bottom of the bar, you got 2 more selling imbalances, 0 against 48, 0 against 32, okay? So even if you're not convinced that this is a potential turning point, remember, you just made a high and you should be looking for clues that the market is going to give you that, is this high going to hold, or are we going to keep going higher? And in this case, this high, it looks like it's going to hold. Why? Because you have price rejection at the high. Traders are rejecting these higher prices, and then you got aggressive sellers coming in. Now, the only thing on this bar that sort of throws a spanner in the works is you have positive delta, and that just tells you that you had aggressive buyers net in the bar. And it's not necessarily a bad thing because you just made a new high and there's a bit of euphoria coming in. So, but maybe you're not convinced yet that this is the high. Wait for the next bar and read what's happening. Now we're starting to trade down. Point of control on the bar and the high is sort of in the middle here, okay, which is where you would expect it. On a normal bar, you have your bell-shaped curve. Your volume is generally in the middle of the bar. That's your value area. But if you're expecting the market to sell off, your point of controls are going to act as your resistance levels on a move down, or they'll act as support on a move up. So you have a red candle. You're thinking markets should be selling off. Next bar, what's happening? You start trading down. You got a lower point of control, so your value area is a little bit lower, and this bar, you trade it back up towards the point of control. So your resistance is holding. You did get one tick through it, but for the most part, it's holding. You have negative delta finally. So just off the high, you got net aggressive sellers are taking control of this market, minus 80. That's a good sign. But still, maybe you're just not convinced yet. You should be convinced already by this bar, but then look at this next bar. Point of control lower, so you got lower point of control. Point of control is migrating lower. You rally back up towards that point of control. Now this is your new resistance level. Where do you trade? You trade within one tick of that, and boom, you come down in here. You got an aggressive seller level in this bar, 127 against 13. But look at this delta, minus 380. So that sellers are definitely in control. And then you just see the market over the next several bars sells off quite nicely. Those are that's when order flow is grabbing you by the shoulders and saying, hey, look at what's happening in this market. Now, that was an example of a swing high, or sorry, the high of the day. We should also look at swing highs and swing lows, just as you would look at highs and lows of the day. So here's an example where we sort of come down and we hit this swing low here. You got a bullish ratio 44. It's a ratio bounds high indicating price rejection down here. So we came down here from the swing high, came down to a swing low, got a sign of price rejection, bounce up a little bit, next bar is up, then you come back down, you test that low. You don't have price rejection in this bar, you just have your normal order flow. Okay. Now, again, so you got a double bottom here, all right? Look at, the bigger picture. Okay, what do you have in the next bar? You've got a sign of price rejection, okay? That's a good sign. And so you had price rejection at the low, you tested that low, it held. Point of controls, you sort of got these two areas, these two bars, the same point of control. Now look at this, with this bar here, where you have the price rejection, where did you trade? You traded down to that point of control. This is now your support level, okay? Look at the delta, it's positive, it's plus 111, it's not the greatest number. Previous bar was negative, okay? These two can sort of cancel each other out. So maybe you're not yet convinced that, hey, maybe we can start moving away. You know, you got some strong positive delta here and here. The first time you hit the low, second time, next bar off of it, then kind of a neutral delta over the next two bars. But then look at this, 2,000. And what do? You come down within, you know, 2 ticks of that point of control. So now your point of controls are holding. You got point of controls moving higher. Your value area is slowly moving higher. And by now you should be convinced that this market is probably due for a nice rally. And what happens? Boom, you get it. You know, how many points over the next couple of minutes. Very, very nice, very smooth. And look at that delta. So it went from, you know, positive delta, kind of small neutral delta, small neutral delta in here, 2 minus 200 plus 100, but then boom, very aggressive delta, plus 2,254 plus 2,900. It's already strong, point of controls are holding, and the market moves up quite nicely. So you can see how, you know, order flow just sort of, you know, it really reads, you know, it really helps you read what's happening in the market. You know, here's a market that's going sideways, right? And, you know, anytime a market is going sideways, you're going to look for times when, you know, signs of when you're going to start breaking out of this sideways activity. And here you got a sign here of price rejection, but at this point, you know, that's nothing. You know, what you want to see is, you know, here you poke out of it, but then you come back in, then you see another sign of price rejection. You know, so now you're starting to make, you know, a little bit higher highs and higher lows, and on these higher lows, you're seeing signs of price rejection. And look at that, then the market makes a nice move up. You're holding your point of controls. You've got positive deltas in here. You know, once you start putting it together, it really starts to make sense. You know, I used to calculate these ratios in my head and on a calculator in the past, but, you know, one of the reasons why I created the order flow trader software is to let the computer do it for me, so I could look at other things in the order flow. And trading around ratios, you know, give you low risk trading opportunities, and that's what you want to do. You want to find low risk trading opportunities. Now, once you understand and can determine possible turning points in the market, you know, based on you know, price rejection or price support or resistance, you can look at other aspects of order flow to help confirm the move. You know, that's going to happen. You can look at point of controls. You can look at delta. So the second thing I want to talk about is, you know, there's more to trading than just having a successful strategy. And, you know, it's a lot like cooking. You could have all the ingredients, you could have the great, you know, your mom's recipe for cooking turkey, but if you don't understand how to put everything together, it's going to taste awful, right? And it's a bit like trading. You know, sometimes, you know, people, they get all the books on trading, they've read it all, and they sit down to start trading, and all they do is hemorrhage money. You know, every trade they take is going to be wrong. And, you know, it's not just buying a trading method and buying the books on trading. You know, you've got to start putting it together. And sometimes, you know, you do need a coach, you do need, you know, support, you know, someone to help guide you along in your trading and help you put the pieces together. And that comes down to having the right mindset. You know, the great athletes, you know, Tiger Woods, you know, in his prime, he still had performance coaches. Michael Jordan had performance coaches because they want to be in the right mindset when it comes time to perform. And it's the same as trading. So how do you get in the right mindset? Is you got to ask yourself, do I treat my trading as a business or a hobby? You know, do you have a business plan, or in this case, a trading plan? And, you know, do you make mistakes? You know, we all make mistakes. You know, sometimes I enter buys when I should be selling. Sometimes I enter the stop price, you know, as a limit order. But, you know, what saves me is I got a procedure to prevent those mistakes. You know, it's easy to fall and make a mistake, but, you know, you have to have a procedure to prevent you from making those mistakes. That's about having, you know, the right mindset. You know, because, you know, you make a mistake and you're going to get distracted by making a mistake, and it's going to knock you off your path. You know, do you have goals and objectives in your trading? Every successful trader I know has goals. You know, and when you're working in an investment bank, your goal is your bonus, right? That's why you want to do well. You know, as a trader trading for yourself, you should set your own goals. You know, it could be, you know, make enough money to go to a nice dinner this week, or make enough money to take the family on vacation. You know, have goals that you can reach. You know, make them realistic. Don't say I want to make $1 million next year, because if you set your goal too high, you're probably not going to reach it, and ultimately you're going to give up on it. And most importantly, you got to ask yourself, do you want to improve yourself as a trader? Like I said, the greatest athletes, they all have performance coaches to help them get to even higher level. And I tell this to people is, they think, well, you're such a good trader, you should just be trading for a living, instead of working with other traders. No, it's not about that. At this point in my life, it's, I want to help people get to that level, because that top level of traders, the traders that are consistent and are successful, that area up there, it's infinite. There's room for everybody up there. It's not like one person goes up, one person comes down. No, everybody can get up there. And once you realize that, you're going to want to improve yourself. And even for me, I find myself, the more that I share, the more my mind is expanded. Actually, sometimes I talk to people and they give me a different way to approach the market that I probably haven't thought of. So it helps me too. It benefits me as a person. It benefits me as a trader. So what does it really take to be a successful trader? We all come to the markets. We want to be successful. Nobody sets out to fail at anything. We all have this dream of being a trader. Yet so many of us have failed at trading. It's like I said, from a young age, we're taught that in sports, you want to play to win, and you should. You shouldn't take up any endeavor with the thought that you're going to fail. So how do you increase your chances of success in trading? Is you got to find your motivation. Okay, you got to get good at trading, and that takes effort and it takes time. It's not going to come overnight. It's going to take work on your part. You don't get good at something automatically. Yeah, some people are born with talents, to play the piano, play musical instruments, or sing or something, but those people are rare. For the majority of everybody else, it takes hard work and effort. You saw Michael Phelps in the Olympics, he won all these gold medals. Yeah, but the amount of training that he did over the course of his life is mind-boggling. So, it takes effort, so you got to find your motivation. That's what's going to get you to put in the work and become better at trading. And you got to know how to measure your progress. You got to set goals. That's how you measure your progress. It's not as simple always as just looking at your P&L. No, you should set goals in life and in trading in general. To get good at something, you need to know how to measure it. Like I said, people say, well, I measure it in the bottom line in the P&L, but measure it as a person, not necessarily in monetary terms. Reaching and completing goals is a good way to do that. So, set goals. Especially now, with the Winter Olympics going on, you see a lot of these kids, they're 17 years old winning gold medals. That's what motivated them is the chance to win a gold medal. Learn from successful people. Don't waste your time trying to figure it out. Go find somebody that's successful. I honestly mentor traders, but I'm very selective on who I take, because I don't want to waste my time. I don't want to waste their time. I want to make sure people are going to put in the effort. They're going to be motivated. They're going to set goals. And, most importantly, take action, get started. A lot of people want to learn how to trade. They'll say it, but they won't do anything about it. You've got to get off your butt and take the action and get started, period. There's no other way around it. You got to open an account, put money in it, and trade with real money. It's one thing to sit and trade sim. You can. That's a good way to learn basic order entry things. But honestly, the difference between trading with real money and trading with fake money is night and day. The decision-making process is completely different. So you can get started trading sim. You got to learn the different order types. You got to learn, how to place a limit order, how to buy at the market, how to place a stop, how to cancel, how to change price. You got to learn the basics of that. But at some point, you've got to trade with real money. But again, you don't need to open an account with $50,000. You open a small account and trade a micro contract. They have these microcurrencies on the CME where the tick is like $1 or something. You don't have to go in and start throwing around 10 lots of crude oil or something. No, you get started, start small. Get in the feeling of trading real money. Feel the pain. Sometimes your greatest lessons come from adversity. So what are the common traits successful traders exhibit? There are several. Like I said, I've worked with many very good traders in my career, and we never sit around and sort of sat around and talked about, you know, the traits. But, you know, after I started working with people that weren't very good traders, I said, you know, let me think back, you know, on what these people that I worked with, what made them so good. And I came down to, you know, there's a handful of things, you know, self-confidence. They're confident in their abilities as traders to make the right decision. Even when things are going against them, they're confident in themselves. They don't second guess themselves. And, you know, bad traders do. They second guess themselves, and in the end, they get out of trades they shouldn't get out of. And, you know, eventually they'll turn around and they'll go to their profit targets. Successful traders have solid trading methods. You know, they don't change their trading method day to day. No, they know their strengths. They build their method around their strengths. And, you know, that's how they make money on a consistent basis. You know, they have strengths and they trade to those strengths. They're disciplined. You know, they stick to their trading plan, which a lot of people don't have. That's the next thing is they, you know, disciplined traders have a trading plan and they stick to it. If, you know, if the loss approaches 5% and they're supposed to get out when the loss reaches 5%, they get out. They don't sit there, well, you know, I'll let it go a little bit more and see. No, they don't. They just get out. You know, that's what their trading plan tells them to do. That's what they do. They set goals, right? Again, you know, I spend a lot of time talking about goals on this presentation, but it's really important. You have to have goals in life. And, you know, early on, I alluded about trading and dating. And, you know, if you've ever dated, you know, you have goals, right? You eventually you want to date a girl because you want to settle down and have a family and get married. That's your goal. You know, in trading, you should have goals. You know, like I said, you want to be a successful trader. You want to make money because you want to provide for your family. You know, that's a goal. Set goals that you can reach that are realistic, but don't set unrealistic goals for the sake of setting a goal. But, you know, set a goal that you can reach, that you can look back on and say, yeah, I did it. I've reached that level. You know, that's all comes down into the trader's mind. You know, having the right mindset, approaching the market that, you know, by setting goals that you can reach. So order flow analysis, you know, makes it easy for me because it gives me the confidence to see what the market is doing as it's doing it. It gives me the discipline to stay out of trades I should not be in, and it allows me to build a trading plan around it. You know, I know that, you know, I can build this trading. I have my own trading plan. You know, when I see coming into a low of the day and I see ratio bound lows or ratio bounds high indicating price support or price rejection, you know, that's the first part of my trading plan. Is price being supported? Okay, I'm going to watch if it is, and I'm going to watch point of controls. I'm going to watch the delta. You know, that's what order flow allows me to do. It allows me to build my trading plan. You know, another example, you know, coming down into a low, what's happening? I'm seeing price support. Oh, I got negative delta. Okay, let me see how the next bar is shaping up. What's point of controls doing? You know, what's the aggressive buyers doing? You know, is there more aggressive buying than aggressive selling? All this stuff you got to start internalizing, and, you know, if you have it in a plan, you know, the first couple of times you trade, first couple of weeks, you know, you have to refer back to it. There's nothing wrong with referring back to your trading plan. Eventually, it's going to become second nature to you. You know, like here, I see price resistance up here, you know, in the ratios. Then all I see is selling imbalances, you know, in this bar. I see strong negative delta. You know, I see more selling imbalances. That's telling me the market is screaming at me, hey, Mike, get short. You know, this high is being I'll say supported, but, you know, the sellers are up there. You know, they're stopping the market from going higher. That's what order flow allows me to do. It allows me to see that here in the market. So what I've presented here is what I've developed for myself. I hope you can find things that you can use in your trading, or things you can modify, adapt your own trading. Again, I'm not saying that you have to follow what I say just because I say it. Instead, evaluate everything you come across, whether it's from me or other guys. You know, there's 5 other guys this afternoon, and, you know, decide if it's going to help you. If not, you know, you reject it. You got to trade with the method of trading that resonates with you, that you can make money with. You know, you can't force a square peg into a round hole. It's not going to work. So you take the parts of analysis, of order flow analysis, and use it in your own trading that resonates with you. So, you know, if you found this helpful, I got this package I think you'll really appreciate. It's a special package today, actually. So the Order Flows Traders software package. And for me, I honestly, I think it's about the easiest and fastest way to trade with order flow. It's going to make you consistent. It's going to help you control your trading. And it's not based on luck or being special in the market. It's on understanding what's happening in the market so that what you see happening just makes sense. So you can read, hopefully you could read the turning points in the market, Again, it's not about picking highs or lows. It's about letting the market tell you that, hey, we're coming into a low area. There's support down here, or there's price rejection down here, or there's absorption down here, or you hit a high and say, hey, you hit a high, but the market might keep going higher. That's what order flow allows you to do. It allows you to see those times, and you don't have to spend 10,000 hours of screen time staring at a screen. I mean, gosh, no one's going to hire you and give you 10,000 hours of time to figure out how to trade and make money. No. Don't take the unnecessary risks. Don't try to go about it yourself, and don't waste your money. And what I say by wasting money is, I mean, don't waste your money by blowing out accounts. It's one thing to spend money on education. That's great, but the last thing you want to do is blow out your account 1 or 2 times. So what is the Order Flows Trader software package? Well, it's the Order Flows Trader software. It runs on NinjaTrader 7 and NinjaTrader 8. There's the volume footprint chart with 4 pre-programmed order flow indicators. The ratios is one of them. I just discussed those. The other ones I haven't discussed, but if you go to my website, orderflows.com, you can read more about them, and you get my chart templates. So your charts, you don't have to dick around trying to set up your charts. You load the template, boom, turn it on, and the data comes in, and your charts are going to look the way my charts look on this presentation. That's important, right? You don't want to waste the time. So having order flow software is one thing. Right? The next thing is you gotta know how to use it. So I don't just give you software and send you on your way. I provide a lot of extra education to trade with order flow. And one of the things that I have, which I'll give you today with the package, is the Order Flows training course. And normally it costs $297. Just 20 lessons. It's 15 hours of video instruction that you could download. You put on your smartphone, your tablet, and just watch it wherever. Listen to it in your car. And there's PDFs that go with it. You get that for free. Also, you get access to my inner circle, which is advanced order flow analysis. There's over 55 videos on order flow analysis. Now, this is not covered in the trading course, and this is information that's only for my inner circle members, and the inner circle is not open for the public. Okay, I open it up maybe once a year, and it costs $997 to join. You're going to get access to that for free for life, and it includes all the indicators, additional indicators that I've released. You get them for free. This is my proprietary trading tools and knowledge. You get that for free. Normally it's $997. If you were to add all this up, the software, the training, and the inner circle, that's already over $2,000. But you're going to get it today for just a one-time payment, $1,250. Right? There's no other payments you got to make. You got to pay your data fees and NinjaTrader fees, but that's it. You can get data from your broker for about $5 a month or something. There's no other monthly payments, none of that stuff. But because of Investor Inspiration, I've got a new thing. I've just released. I haven't released it yet. I've been holding back releasing it. I share this with my people that I mentor. It's what I call the Trader Kickstart. And what it is it's about the mental aspect of trading. And I'm just in the process of uploading the videos right now. If you're a member of the Inner Circle and you bought the software before and you're part of the Inner Circle, it's going to be in the Inner Circle as well. And what includes topics like creating a trading plan, trade management, how to stay focused, trading discipline, and a lot more. I said there's 12 different topics. Why traders lose, why traders fail. Each video is anywhere between 30 to 45 minutes long. I said it's right now it's not available to the public. If I were to, I've been thinking about offering it out. Someone says I should, but I just haven't gotten around to it. But I'm sort of getting around to uploading the videos. But add that in there. You're going to get that as well. You get access to it. Again, it's going to be, if you're in the Inner Circle, it's going to be part of the Inner Circle. That brings the total up to $1,297. But again, you could get it just for a one-time payment of $1,250. So if you don't believe me, see what others are saying. This is from Facebook. Mike, your Order Flows Trader software is remarkably helpful. I can clearly see now what's happening in the markets. Put it in perspective. What else can you spend $1,250 on? You buy a new iPhone, then in a year you could change it. But at that point, you still won't know how to trade. So why don't you invest it in yourself? Invest in yourself. Put the money to good use and in yourself. So what you do is you go to orderflows.com/allin.html. It takes you to this page. Just scroll down to the bottom. There's some videos in there if you want to watch about the software, how to set it up, or sorry, about how to read the charts. Go to this button, it says join now, I'm all in. It takes you to PayPal. PayPal processes it. I don't get your credit card information. I don't want your credit card information. And so it's processed through PayPal. And once your payment is processed, then I'll send you all the information, the download links, and everything. So why should you join Order Flows? Is because you see the power of order flow analysis and how it can change your trading. You want to understand what's happening in the markets. You're excited to find low restraining opportunities. You want a life of freedom and fulfillment. That's why I trade, as I like the freedom and I like the fulfillment. I like getting emails from people saying, hey, you know what? Your approach to trading has put me in the green. It's made me a profitable trader. So now if you want to get my book, go to this page, orderflows.com/book.html. You'll be asked for your email address. Then it'll take you, after you enter it in, it'll take you to a download page where you can download the book. Yes, you're going to get on a list. I will send you emails once in a while about webinars I got coming up and things like that. But it's good to be on that list. So anytime I got a presentation coming out, you'll be notified. So all you got to do is go to orderflows.com/all-in, and you just go from there. So thanks, Renee. I think that should do it for me. Thanks, everyone. It's Friday. It's Gong Xi Fa Chai. It's the first day of Chinese New Year's, and Monday is President's Day. So it's kind of an interesting weekend.